In this video, guys, let's talk about what is the opening range. Stay tuned. Hey traders, warm welcome to you. All right, so opening range, multiple different definitions, and the textbook says different things. Pit traders say a different thing, the old pit traders, algo traders say a different thing, and it gets quite confusing. So it's kind of your definition that you put on it. And there's a couple of ways of doing it. Now, when you kind of open a price, a specialist opens a price on the NYSE, they've got their own opening range and they've got this, forget about that for now. Let's imagine that you're talking about an index or something that actually is opening and it's just starting to trade. So there's a couple of definitions. I know there are more. I'm sure some of you guys are going to pick them up and put it in the comment section below. If you know them, stick them in. Helps others as well. All your kind of comments help others as well. So time-based is the first one. So many people will say, hey, to me the opening range is the first 15 minutes of trade. So imagine this was kind of 60 minutes here and it's 13, obviously that's 15. So that for many people would be the opening range, and imagine that's 15 points. We should put 15 points there. So that's for some people might say so 30, and some people might say it's the hour, and the hourly might well be here, and they say, okay, well that's your opening range in the hour, and that happens to be 80 points or whatever it may be. Now that's fine, and I don't think that's a problem, and it's just how you define it yourself. You've got to define it and stick to it. If you think the first 15 minutes, because you're a very active trader, is the opening range to you, then good. You work with that as your framework. If you think it's 30, you think it's 60, fine. Why would you do this? Kind of jump the gun a little bit here. Is because then you might have an idea of what the daily range is going to be like. If the opening range that you're constantly using as a framework and an anchor is X, and all of a sudden you have a big opening range, then you might assume that the daily range is going to be more. So you can start to look for extended targets. You can start to hold your trade a little bit longer. You can start to play the game of, hey, I maybe will break out of stuff because the opening range was pretty strong. There's a high there. Maybe we will break through the high. You don't know. So this is something why the opening range is important. The other way that people often use the opening range is price-based. So it's the swing. So I'm kind of pointing to this. So imagine this kind of, and this is subjective as well, but you might say the opening range is the swing low to swing high without a major retracement. So in this example, it would be from the low here to the high. There's your opening range. In that case, it took kind of 30 minutes to do. Now, maybe it takes less time to do it, and maybe there was a bit of a bigger pullback here. You'd call it that, but the opening range is kind of the swing low to the swing high before there was a major rotation. In other words, how far did it go? How far did the market press before some kind of counter trend move came in, some supply came in if there's a lot of demand, some demand came in if there's a lot of supply to the downside, etc. So price-based swing, and again, as long as you keep the metric the same, that's fine. Now, why I might use this, as we alluded to earlier, it's a great way of creating a framework for your trades. You say, right, the opening range on this first hourly range is X. This is what I'm expecting, and this is what I now will see moving forward. Oh, this is what I expect to see, because if the opening range normally, let's kind of run through an example. Imagine your normal opening range and you're going for a 60-minute range is equal to, let's say 50 points, right? Trading the Dow, trading whatever it may be. But now, all of a sudden, this is your expected, and all of a sudden, your 60-minute range is 100 points. And you're like, wow, that's twice what I expect to see. So you could theorize then that actually, if I was to extrapolate to a daily range, the daily range might normally be 200 points. Well, this time, I think we're probably going to do more than 200 points because we've already done double what we normally do in the first hour. Not always, but the idea of this is that you can go, right, well, let me extend that out. Let me assume now that the open is going to be indicative of what the daily range is going to be. So the daily range may be so much more. So from a trade perspective, what do? Well, I don't start to look for mean reversion trades. I don't start to do this. I don't start to try and short things too early. I look for price extensions. And if then you kind of go from a perspective of, wow, there's my 100-point range, and you see this, then maybe you can start to look for this, and that was a key level. Imagine that was a key resistance level from a while ago. Then all of a sudden that becomes a feasible breakout because conditions are much more expanded, much more stretched, much more money flow coming in. Whereas before, you might be like, you know what, I don't think I can expect it to break out of a multi-month high. This is a multi-month high here. You know what, we normally do 100 points. This range is already, 125 points, and our average is normally 100 points on the day. Yeah, I'm pushing my luck. But when the opening range, whatever parameter you're using, is big, you might say, well, you know what? That's very feasible that we break out. That's all of a sudden it changes the way you adjust your strategy. Even if you're not looking at trading at the open, you might go, well, if I can get long on a little break here, if I can get long on a pullback and a pause, I'll take it, because actually all the signs are lining up that suggest potentially we're going to get these extended targets, and that comes from the opening range. That's why it's important to watch it, guys, especially you're a day trader, to kind of look at the open, however you define it, whether it's a time-based one or a price-based one from the swing or other metrics that you're using, looking at that framework and going, hey, how is it relative to prior opening ranges, and how can I use that information to maybe give me trade ideas or trade management ideas moving forward for the trades during the trading day. Take care, guys. See you in the next one. Bye-bye.